One of the most common questions business owners ask me is, what retirement account should I use? Hi, my name is Thomas Kopelman. I'm the co-founder of All Street Wealth, a financial planning firm for high-income business owners in their 30s to 50s. Think about it. It used to be so easy. You were a W-2 employee, you had a 401k or a 403b or something similar set up for you. All you had to do is choose whether you wanted to do Roth or traditional and how much to put in. But now as a business owner, you are the business, right? You are the one that has to pick which retirement account to use. This is one of the most common things that we help our clients with, is evaluating what the best option is. So I'm going to walk through my favorite accounts in order based on type of business. So the first one is a solo 401k. I don't think there's any denying that solo 401ks are the best retirement account out there. The problem is that you only can do this if you only have yourself in the business, or if your wife or husband is the other person. If you have any employees, anybody who's not family, your spouse, you no longer can contribute to a solo 401k. So it's definitely limited to solo business owners. If you do qualify, then you can put in $23,000 on the employee side, and then you can put in 25% of your salary if you're an S Corp, or 20% of business profits if you're not an S Corp. So this ends up allowing you to put in a lot. So let's say, you have $200,000 of profit, you can put in the $23,000, and then you would be able to put in 20% of that $200,000. So roughly about $40,000. So you could get $63,000 in a year. If you were an S Corp, you had a $100,000 salary, you could put in the 23, and then you could put in 25% of that salary for another $25,000. So a total of $48,000. This is why this account is really powerful, because it has the employee side contribution and the employer. You can do Roth with this, you can do traditional with this, you can even do the mega backdoor Roth 401k if you use the right provider. And if you have a spouse, you can really stack this and end up getting and putting a lot away for retirement. One thing that you do have to note is once you cross 250K in assets, you do have to file forms. It's Form 5500 EZ. You want to make sure you do that. Until that point, you don't have to file it. Okay, let's go to number two. Number two is a SEP IRA. To be honest, I'm not a big fan of SEP IRAs for very many businesses at all. Why? Because if we use that last example, the numbers would be very similar. You just don't have the employee side. So let's say you're the S Corp, you have $100,000 salary, you can only put in the 25% of the salary, so the $25,000, so you lose the other 23 on the employee side. If you're a partnership or a sole prop and you have that $200,000 of profit, well then you can put in the 20% of that profit, about $40,000, but again, you don't get that $23,000 employee side. The other thing about SEP IRAs is if you have this and you have employees, you have to put in the same percentage. So let's say you put in 15% of your income, or you're gonna have to put in 15% of your income for all your other employees. There are rules on you can exclude them for X number of years. But at the end of the day, not my favorite account because it misses the employee side. There are new rules in the Secure Act 2.0 that does allow Roth. It's not something you see very often, but it does exist. The other side about this too is if you have money in a SEP IRA, you can no longer do backdoor Roth IRA contributions, because the pro rata rule will look at, do you have any money in any other traditional IRAs? And if you do, the backdoor Roth becomes taxable, which is another reason why I don't really love using SEP IRAs. So number three is a regular 401k. So for so long, people didn't set up 401ks. They did simple IRAs or SEPs because they were cheaper to do. But now with providers like 401go, Guideline 401k, Betterment, etc., you can set up 401ks for your business for a very low cost, and you can get a tax credit back for setting it up. So with a 401k, you can do the $23,000 on the employee side, and then there's a match that comes from the employer. It's going to be like a 3% match. It might be 100% to 3, 50% to 5, it might be 100% to 4, etc. But at the end of the day, you can pick that match. Typically, I advise people to pick safe harbor plans so you don't have to go through compliance testing, but they're really great options, and you can do profit sharing contributions at year end to end up putting more in for you and your employees. Okay, the last one that I really want to go through is the simple IRA. So simple IRAs are basically just like a more basic form of a 401k. They're easier to set up, there's less paperwork, but again, these providers are gonna do that paperwork for you. So a lot of times people used to use Simples because it's like, great, we can just put it in, they have a lower max contribution than 401ks. They have that employee side, and then typically the employer just puts in 3% no matter what anybody else puts in. But again, the simple IRA, just like the SEP IRA, causes the pro rata rule to be triggered, which means that you can't do backdoor Roths. So at the end of the day, for me, I like solo 401ks the best for businesses with just the owner, the employee, or the owner and their spouse. And then I like 401ks for businesses where you start to have employees, especially now that you can set them up for a pretty low cost. But at the end of the day, it's really important to take a look at your business, how many employees you have, how much do you put in, do you want to have the employee side, are you over the income limit to do backdoor Roths? All of those variables are extremely important. Thank you for watching. If you enjoyed this video, please leave a like and go subscribe to my channel for more personal finance content. And as always, please leave your thoughts in the comments below, and I promise to get back to every single one of them. We'll see you back next week.